All right, welcome to Talkin Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about a company called Argo Blockchain. They are a Bitcoin mining company, stock ticker ARBK. Argo's stock is collapsing this morning. They put out a press release. I want to go through the press release they put out and a few other pieces of information that were big red flags, in my opinion, that something bad could be coming. So today's news was really the straw that broke the camel's back. They're down massively, so I want to dig into it, go through it, see where they go from here. So this is an important one. Let's take a deep dive on Argo Blockchain. If you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot, and I really appreciate it. Also, if anybody wants to join, they can hit the join button and become a member of the channel. Members get some additional content. In addition to that, they also get once a week, we do a members only live stream. That's every Tuesday after the market closes. If you don't see a join button, then you can hit the link below. Okay, let's talk about Argo Blockchain. They're trading at $1.07 right now. They're down 45% on the day. This was already a company that had been decimated. They were trading at or near their all-time lows. At the moment, and it's early in the trading day, you'll see this stock is down 45%. Okay, so we'll look at the charts later, but this puts them down about 95% off of their highs from November of 2021. So that was less than 1 year ago. And again, that's down 95%. They are not the only Bitcoin mining company that's down 95% or more than 95%. So they are not alone, but some specific news came out today, and it is deeply concerning. So let's get to the press release and see what happened. This came out October 31st at 5 o'clock this morning Eastern time. Argo Blockchain shares collapse as planned fundraising falls through. Argo Blockchain PLC shares fell Monday after it said it no longer expects to carry out a share subscription with a strategic investor and warned it would need to complete further financing to avoid curtailing or ceasing operations. So this is a very dramatic statement. Obviously, this should give investors pause. They're talking about potentially curtailing or stopping operations altogether. They were counting on this $27 million. This was critical liquidity for them. They're telling us that without the money, they're going to curtail or cease operations. So it starts to get very hard. Their stock has now crashed 95%. So raising money through equity gets very difficult. The dilution gets massive. People are not as interested. Liquidity has already dried up from the entire Bitcoin mining industry. So this was a tough job to begin with, and it just got a lot harder. Then they say, while the company explores other financing opportunities, it can't be assured that any definitive agreement will be signed. If it is unsuccessful, it will be cash flow negative in the near term and would need to slow or stop operations. Okay, so I can't stress, I'm going to leave it at that. That says it all in itself. They need cash now, or they're going to either have to slow down or potentially altogether stop their operations. So that's about as grave a warning as you can give. Okay, so I'm going to go back to the previous press release because there was some gigantic red flags in here, and we did talk about this on the channel quite a bit. Bitcoin miner Argo Blockchain raises $27 million to ease liquidity pressure. Shares plunge 15%. So obviously the $27 million of dilution caused the shares to decrease, so they plunged 15% on the day. But as we go through this, you'll see that was a small price to pay for money that they absolutely needed. So although this is not an ideal situation and the stock rightfully took a little bit of a hit on that day, this was a step to ensure the survival of their company. Okay, London-based Bitcoin miner Argo Blockchain has raised $27 million after agreeing to issue 87 million shares to a sole investor. In an announcement published on YouTube, the firm's CEO Peter Wall explained a number of steps Argo Blockchain has taken to improve its liquidity position in light of the ongoing crypto bear market. Our profitability has been squeezed from both sides, from high energy prices to lower Bitcoin price. That results in a cash crunch for Argo. So he's telling you right there, they're in a cash crunch. This next part to me was actually the most disturbing part of the entire press release. And I don't think a lot of people paid attention to this, but this was really a big red flag that something was wrong. In addition to issuing 87 million shares, which equates to around 15% of the business, Argo announced the sale of 3,400 Antminer S19J Pro miners to a third party for a total of $7 million. The sale of mining equipment will cause a reduction in the hash rate, Wall added. So This is 3,400 of their S19J Pro miners. So essentially, this is among the latest round of Bitcoin miners. These are brand new miners, and they did this in order to get $7 million. So to me, that said, even though they're raising $27 million, that was not enough. And selling their equipment, which is the only source of income that they have, to me was deeply disturbing. Lastly, in this press release from October 7th, they said, assuming all the transactions close, we're confident that we have the liquidity and balance sheet to get us through the next 12 months, Wall concluded. So, assuming the transaction closes, well, it did not close. So now they're telling you they don't have the liquidity to get through the next 12 months, and they need something to happen. We've seen a bunch of Bitcoin miners get some either debt or equity financing done in the year 2022 that looked very, very difficult to do, but they did get it done. So this does not mean Argo Blockchain is immediately out of business, but they are giving you a risk. Again, I want to read the language. If it is unsuccessful, it will be cash flow negative in the near term and would need to slow or stop operations. That's the warning they're giving today. So this is not an unclear situation. They're making this crystal clear. They need to find a deal or they have a serious liquidity problem that could potentially end in them ceasing operations. Okay, I just want to point out something else that I find a little frustrating. So I'm not saying they did anything wrong. This is a UK-based company, so I do not know all of the accounting rules of every country in the world. Okay, so there are some differences, but to me, this one's a big difference. And I want to go through what it is because it dramatically changes the way these financial statements read, in my opinion. If this was something I was investing in, I would do a conversion on this, and I'm going to show you what it is. Right now, the number one concern of all the Bitcoin mining companies is liquidity, so current ratio is very important. So the current ratio is basically the ratio between your current assets and your current liabilities. You need to have more current assets than current liabilities, otherwise you don't have enough money to pay the bills that are due essentially now. So you'll see they have total current assets of $136,750,000. They then show current liabilities of $64,799,000. So at a glance, this current ratio actually looks decent. It's about 2 to 1. They have a lot more current assets than current liabilities, and they look liquid. They look okay. But if you dig a step deeper, they have a line under their current assets, trade and other receivables. This is footnote 11. If I go to footnote 11, you're going to see mining equipment and prepayments, $82,587,000. So they have deposits on their equipment that they're classifying as current assets under accounts receivable. Again, I want to be crystal clear. I'm not saying that this is incorrect from an accounting standpoint. I don't know what the rules are in the UK. This is the super quick definition of current assets. Cash and other assets that are expected to be converted to cash within a year. So when you have put a deposit down on something that you're buying, you are not expecting to convert that to cash within a year. That is going to convert to a long-term asset, and so it should be considered as deposits in long-term assets. That's the way it's classified on the US financial statements. It grossly changes their current ratio from being a 2 to 1 current ratio, which looks healthy, to being underwater. In other words, they have less current assets than they do current liabilities if you take this money out. And you can see it's the vast majority of their current assets. Okay, so enough said about that. I just wanted to point that out because it is a little bit tricky. And when you have an industry that has companies in so many different countries, you do run into some of these different accounting policies. If you're going to make an investment, you've got to do a deep dive and understand the differences in these. I don't invest in Argo Blockchain. I never have. This is the level of due diligence sometimes it takes because, hidden in here is a gigantic red flag that they are upside down on their current ratio in a big way. Okay, so lastly, let's just take a look at the chart. This is on the 1 day. So back in August when Bitcoin had its run up to $25,000, Argo Blockchain traded all the way up to almost $7. So they had a nice run up, but since then Bitcoin has turned around, and from $25,000, it's now trading more in the $20,000 range. So prior to today, Argo Blockchain was down about 71 or 72%. Now, obviously, a massive move down today. So to where they're trading intraday today, they are down 86% just from their high in August, which was just 2 months ago. So this stock has crashed 86% in the last 2 months. Obviously, a lot of that is today. You'll see they had a gigantic drop off. Here's October 6th. October 7th is when that press release came out that we looked at it, that they were doing 15% dilution. So they had a big drop off from there, and they just continued to fall. They set a new all-time low. All the Bitcoin miners had a little bit of a rally, so Argo blockchain actually had the biggest rally out of all of them in these 2 days, which was the 25th and the 26th of October. But now, obviously, today the stock has absolutely collapsed, so they are down in territory. Since they listed on the NASDAQ, they have not seen this type of territory. So if I move to the 1 week time frame, we can take a look from their November highs, which is their 52-week high, until right now, including today's action. This stock's down over 95% in less than 1 year. So again, that is not actually uncommon for the Bitcoin miners. However, the acceleration to the downside has been massive in the last 2 months, and clearly this press release today is a very significant change in their financial position. So again, this is not financial advice. I can't tell you to buy Argo or sell Argo. Some people will buy this news in hopes that they do find financing and there's a giant upside reward. However, the risk obviously has changed, the risk profile. There's a much bigger risk. They just told you in their press release that there's a potential they're going to cease operations. Again, not financial advice. Please be very, very careful. This is a great, great example of how much you really need to do your due diligence on these stocks to understand exactly where they're trading at and what their value is. Hope this helped. Thanks so much for watching the video. If you made it this far, please remember to subscribe and smash the like button. Again, thank you, and I will see you in the next video.